And Kerry, let's talk a little bit about Apple first up. I mean, this stock trades at a premium to the market in terms of its market valuation. Is it worth it?
Yes, I think it is worth it. Apple, of course, is the biggest company in the world. It's amazing that in a quarter they can produce $85 billion of product. Biggest manufacturing, biggest service company in a way in the world. And what the market has done this year, it's really penalized Apple because it's at the forefront of supply chain issues. It's underperformed the market by about 50%. So what they have to do is beat the number, $1.23's consensus, show that they're selling a lot of the iPhone 13, that they've been able to maintain higher ASPs. Supply chain problems are manageable. I think with their power, they probably can manage better than some of the other competitors. And if the market is comfortable with what they say and what they talk about for the next quarter or two, I think that the stock can go higher because, as I said, it's been one of the weaker things, nothing like what Microsoft and Google have done so far this year.
You know, Apple has been such a big part of the story for so many other tech companies that have reported this year, the changes in their privacy hurting companies like a Facebook, like a Google, like a Snap. Is it helping Apple?
It's probably helping Apple's advertising business, but I don't think they're going to talk about that. There will be questions. I don't think they want to attract scrutiny. This is something that will play out over years. It's not as if Apple really talks about how advertising is a big driving force, although within the service side of the business, it definitely is. But they're not trying to make enemies on this call. They're going to try to establish their credibility as huge supply chain owners and controllers and able to push product out, again, at that $90 billion a quarter. I mean, when you think about the cash flow, in this year, they will have paid $14 billion of dividends, bought about $95 billion of stock, and they're still going to have $100 billion of cash flow. It's over $200 billion. The entire U.S. airline industry doesn't have sales in a year of $200 billion.
Let's stick on that supply chain issue and turn now to Amazon. There have been a lot of people wondering if they've been hit the same way, but they control so much of that supply chain. They've got so much bulk. I mean, I'm a pretty frequent user, and I haven't noticed shortages of anything that I try to buy on Amazon or, frankly, much trouble getting any of it.
Well, I think there have been some shortages of product that people have found in different locations, and they're going to address that. They're going to have to talk about wages or whether they're able to hire enough people in their distribution centers. Again, Amazon has underperformed the market considerably. It's up about 5% this year. So any comfort that investors will feel with the kind of number they put up, again, this is against a very tough comp. During the lockdown, you know, everybody was buying Amazon constantly. So anything that's above, I would say, the high teens in sales growth will be considered a plus, and that could really move the stock higher.